Hello traders, my name is Tomasz Wiśniewski. I'm a chief analyst in Alpara Research and Analysis, and this is daily analytical report. Half an hour webinar where I will tell you what's going on the markets, and we'll try to look for decent trading occasions. Recently I found a report which showed that Friday is actually the worst day of trading in terms of the benefits, in terms of the upswings on the stocks. That's the thing that I was suspecting for a long time. That is why, for example, I limited my trading recently, like a few years ago, because I checked stats and I noticed that Friday actually is my worst day of trading. So instead of losing money on Friday, I avoided Friday and my results were significantly better. But let's look for some decent trading occasions. Here, hopefully we will find some, and you will be happy with the time spent here. As always, we have to start with the calendar, right? Because you never start trading without checking what's going on the markets. As you can see, we already had data from UK. We had industrial production and manufacturing production. I don't think it's. I have to go here. Okay. Industrial production, manufacturing production came much better than expected, which gave boost to the British pound. What we also had was trade balance data from China, which was worse than expected. Also pack of data from Japan, which also came worse than expected. But for example, Japanese yen is stronger right now. We also can see that we had a Fed speak overnight. William Dudley was speaking. He said that it's appropriate to continue to remove monetary policy accommodation gradually. Low inflation may be structural. And also we had George who said, from Fed, who says that it's time to continue with Fed rate hikes. Still to come today is data from Canada, unemployment rate and change in employment. Pack of data from the job market, and that would be it. Also a Fed speak here, 40 minutes. We will have Harker speaking, FOMC member. So that's the calendar for today. On the market, American dollar is getting absolutely crushed, absolutely battered, especially overnight. We don't have a main reason of this situation. Well, we all know what the trend is, right? So it's always more probable and more probable that the trend will be continued, right? So this is just the movement with the trend. It's also supported by problems in American politics. It's also supported by fears about the new hurricane, and actually two new hurricanes that are approaching Florida. Fears about North Korea, but there's no one single driver of such a situation. Yesterday we got ECB. ECB was perceived dovish. Hawkish, I'm sorry, because the euro went stronger. Mainly because Mario Draghi was asked, is the current rate of euro-dollar, is that a concern rate of euro-dollar and overall strength of euro, is that a concern for ECB? And they failed to say that yes, it is a huge problem. So it allowed traders to buy more, to buy euro, if it's not a huge problem right now for ECB. it means that we can continue with the trend with the trend, and that was the outcome of this. Mr. Draghi felt comfortable, suggesting that the recent strength of the euro was just a result of how the European economy is doing good and improving economic fundamentals. So that was basically just a green light for traders to buy more euro. So both banks, Bank of Canada, brought us nice movements on Canadian dollar. ECB brought us nice movements on euro. Now it's time to digest that, and we can slowly move towards the technical analysis now. So let me show you the charts. We can start with euro dollar, why not? Because you can see that yesterday we bounced off this horizontal support here, we broke another one. We tested those highs from the end of August and we broke them. This breakout is not legitimate right now because on a daily chart the price did not close above that resistance. And why actually there is a gray line? It's not only because of those highs from September, no. If we will see the weekly chart, these are lows from 2012. So that's a pretty significant upswing. Also, I'm just wondering if, for example, this one is not the same as the previous one, as the current upswing. Almost. Actually, that will be interesting what the price will do when the price will reach this area here. At the same time, it will be around 50% of the correction of that level. So we are slowly approaching an important resistance. The first one are those lows from 2012. Right, this is this gray area. Then we'll have 50% Fibo, which is 90 pips higher, and then 130 pips higher. We do have a correction equality pattern. So that's very interesting what will happen here. So far, well, obviously the sentiment is positive as long as we stay above that short-term uptrend line, as long as we stay above that long-term uptrend line. There's no other option on euro dollar than the upswing. But we can slowly start to wonder where this upswing will stop and we'll have any bigger correction, because so far we didn't have big corrections. This one was around 250. This one was the same. We remember that we had a correction equality pattern. As you can see, 250 as well. For example, price reversing now would be 270, or maybe to 38.2 would be 350. That would be a nice correction. But again, so far we do not see any signs of possible reversal. We would see, if, for example, on a daily chart, we would bounce with a shooting star from that resistance. But so far there is no shooting star here. British pound to American dollar, that is an interesting situation. You remember that support that we are talking about here, right? I hope you do remember that, and we traded that, but look, we closed our position here. That was a good mid-term trade, not a long-term, because now we can see that the price is significantly higher, but we closed and we avoided 100 pips correction. The problem with that trade was that we didn't renew our entry, so After this, we should renew our entry here or here, but we had other trades on the horizon. Right, so definitely sentiment on British pound to American dollar is positive. So Brexit will Brexit. Soon we should see the breakout of those tops from the beginning of August. And after that, the next target for cable is here on 134.50. 134.40. Okay, let's say 40. It's actually a wide area, so we can stop in any of those places here. Okay, the next one, the next instrument which I have for you is S&P 500, which is having a sideways trend. The sideways trend is not very interesting actually. There's no great trading signal here yet. We do have a sideways trend since Monday. I would say that as long as we stay above 2,455 points, we are still in a positive territory and we should see a further upswing. New Zealand dollar to American dollar. What we are having here is a false breakout below here. That's an interesting situation. So this is false breakout below the support, below the neckline of this head and shoulder formation, left shoulder, head and right shoulder. But in the same time, as you can see, that is head, that is left shoulder, and that is right shoulder. So that is also a inverse head and shoulder formation with a breakout of a neckline, because this green line is a neckline. And now after this we should see a further upswing. So there is a buy signal on New Zealand dollar to American dollar. Moving forward, and this is dollar index. You can see this bloodbath that we got overnight, yesterday evening and early morning. Like the biggest drop happened yesterday, but it was continued overnight. It all happened with this false breakout above the trend line. You see, that's why false breakouts are dangerous, are very dangerous. And once you will encounter a false breakout, if you're on the wrong side of the market, you have to escape. If you're on a good side of the market, you can slowly count the money. Gold, my favorite. Today we wrote an analysis for one of our partners in China with the analysis of gold, long-term analysis, because, well, short-term situation, mid-term, we all know, right? This is the beginning of the year and the gold is climbing from the first price in 2017 was the lowest price, and now the last price is the highest price, right? So a yearly candlestick is definitely amazing here. But I would like to mention the long-term situation here. As you can see, 2000, for example, gold was worth like $200 per ounce. We are climbing to reach a peak in 2011, almost $2,000 per ounce, and all that drop here looks like a wedge. Well, it is a wedge, right? It is a wedge. It is a legitimate wedge because we have 3 resistances here, or even 4. We have 4 supports here, so it's a legitimate wedge. Also, what the price is creating here is like a left shoulder head and a right shoulder, inverse head and shoulder formation. Not the prettiest one on the market, but still. We broke this very important, well, first of all, we broke the upper line of the wedge, which itself is a huge buy signal. And after this, after we broke that upper line of the wedge, the price already climbed like $70 higher. We also broke this horizontal resistance on $1,300, which we are now $50 higher. And now the first potential target is this yellow area. We can stop on highs from 2016. We can stop on highs from 2014. We can stop on this congestion here from 2013. So that's why this area is rather wide, but this is a potential stop. Maybe we'll have a reversal here, testing 1,300 again, and then maybe a massive upswing, right? Because that breakout of the upper line of the wedge, that triggers a massive, not massive, but very strong buy signal on gold in the long term. It's obviously supported by a weaker dollar. But let's imagine that we will encounter a bigger correction on S&P 500, like a small short-term recession. Well, imagine what will happen to gold at that time. At that time, gold should skyrocket. American dollar to Mexican peso. Here we are waiting for the breakout of the symmetric triangle. It's also a legitimate pattern because 4 points here, 1, 2, 3, 4 points on the upside. Sideways trend, not very interesting. What will be interesting here is a breakout. Will be a breakout. As it often happens with those symmetric triangles, don't go for the first breakout of the upper line of the triangle or from the lower line of the triangle, because slightly above and slightly below we have horizontal supports and resistances, right? And we need to break those yellow areas first in order to trigger this buy signal, aiming this resistance. And let me show you why this resistance is important, but maybe on a daily chart, right? Support, 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 resistance. So that will be a legitimate target for an upswing. Or this on the bottom, it was a resistance here, here, support here, 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 and that will be our target on the bottom. In terms of the number of pips, it would be better if we broke the lower line, because we could expect a bigger movement here. But that is a very good looking potential setup here. WTI oil. After triggering buy signal after the breakout of that wedge, upper line of that wedge, and breakout of 50% Fibo, we are having a sideways trend. We are waiting for the further development, but what I'm seeing here is a pennant. Look, let me connect those lows, let me connect those highs, and that's a pennant. If we look in any book, it's about trading, it's written that pennant is a trend continuation pattern. So what we should expect from this formation is a breakout of the upper line and a movement to the 61.8. Euro to Japanese yen. On this battle, which currency is stronger here, because both euro and Japanese yen are strong. Japanese yen is a bit stronger right now, but unfortunately there is no trading signal here yet which I could share with you, at least according to my system. Silver is touching the upper line of the channel up formation, but it doesn't mean anything. It does not mean that we will bounce from this, because in channel ups what counts is a lower line. Upper line is just there to look nice, but it's not a strong resistance, especially if I have an example for you on euro to British pound. Okay, where we recently had a channel up formation, like here, or even here, lower line, upper line, and it could broken here. So it doesn't really matter that we should have a bounce from here. Let's come back again to silver. Silver has a clear aim. They should reach this green resistance on $18.5 per ounce. we have a high chances that we will get there. American dollar to Canadian dollar, heavy drop here. Instrument is extremely oversold. I thought that they will try to reverse a little bit, but as you can see, they are aiming for this impulse here. So that was a 2,200 pips drop. So far here we do have 1,750. So still we do have for this impulse equality pattern, we do have 530 pips, which makes it a lot. But remember that it's not very common that the price drops like that without a correction. Like even when we had drop here, there was a correction, drop here, correction, drop here, correction. So we had a drop here, and most probably we should get a correction. Like for example here, strong drop and correction, right? Maybe, in my opinion, it will eventually come, and by eventually I mean like the next week. Euro to Australian dollar, no trading signal here yet. That's a daily chart, and 1, 2, 3, 4, 5, 6 days, 6 trading days, more or less in a range, which for me is absolutely not interesting, and I try to avoid such setups as much as possible because for me it's not tradable. Australian dollar to American dollar, at the beginning of the week we wrote a paper about the long-term sentiment here, because we all knew that there is a positive sentiment on Australian dollar to American dollar, but I was asking for how long it will be present here. And if it's still there, right? Because the buy sentiment was triggered exactly, well, it was triggered at first here at the very beginning of the year when we broke the long-term downtrend line, but it didn't result in an upswing straight away. The price continued to create a symmetric triangle, and the buy signal was created on this weekly chart, which was in the middle of July, where we broke two important resistances, right? We broke the upper line of the symmetric triangle, which itself should trigger a buy signal, but we also broke yearly highs and highs actually from 2016. So two very important supports broken in 1 week. After that, the price continued, then used those broken supports, actually not the wedge, but let's say 23.6 and maybe those highs as well, and after that performed higher high. So as long as the price is making higher highs and higher lows, the sentiment is definitely positive. We stay above the midterm uptrend line, it all looks perfect. Euro to British pound, here is a very interesting situation, because you all know that there is a long-term uptrend here, right? And before ECB, the price was creating a wedge pattern, and a wedge is a trend continuation pattern. And ECB allowed us to break the upper line of the wedge, but this movement was not continued. Buyers failed to continue this movement, and price came back inside the wedge, which actually makes this a false breakout. And we all know what the false breakouts are capable of. If you don't remember, they are capable of creating a strong movement in the opposite direction. But okay, we are above the support right now, so we do not have to enter the market now. We can wait for the breakout of this support. Once the hourly candle, once the hourly candle will close below that green area, that will be a sell signal, but not a long-term sell signal, because here we do have a long-term uptrend line here. That black line is a long-term uptrend line, and we can see that it's 70 pips lower from that place, 50, even 60. Right, so that will be 50-60 pips occasion. American dollar to Japanese yen, that's interesting. I was telling you that breakout of this support should trigger a sell signal. And it did. But let's look, for example, on H4. We had already breakouts here and here. Okay, but no. Look again on a daily chart. That were just false attempts here, and the price did not close the day below that blue area. The price closed the day below that area yesterday, and it immediately triggered sell signal. So that is an example of why you should wait for the end of the day. Because intraday the price can test this level. If you're not patient enough, you will go for that setup and it would end up with loss. But here, that triggered a strong signal, a strong sell signal, so strong that the price absolutely crashed the yearly lows. So the lowest levels in 2017 from April, and we went to the levels from just after election. As you can see here, election was here, and we are on the levels from 2 days after election. American dollar to Polish zloty, new lows, 351 area, which was anticipated by us at the beginning of August. We wrote an analysis that we should get there. Why? Because that's local, that support is pretty clear. No magic here. And that the gravity eventually got this level, got the price. Now they are fighting for the double bottom formation, and actually on a daily chart the price is trying to create hammer, but it's just a signal to take some profits rather than for a reversal. And the last one for today, which is DAX. DAX, even despite the stronger euro, is climbing higher. Why I mentioned strong euro? Because we all know that German economy is based on export, and a strong currency is hurting exports. But they said A, they have to say B. So by saying A, I mean breakout of the upper line of the wedge here and breakout of 23.6. But in the same time I said that there will be no buy signal once the price is below the red area, and here we are. So the price is not breaking this area yet. That's not a breakout. If you consider that as a breakout, well, you can, but I haven't seen many upswings after this kind of breakout. I rather see drops. Price is still relatively high, so they can break it, but the fact is that I will not even consider opening a position here once the day did not close above this red area. And so far day is not closing above the red area, which for me creates a situation where there is no buy signal here. Okay, my friends, thanks very much for watching daily analytical report. That was a good one. We had some nice trading occasions. Now we'll have a short break, and after that live trading session. So I will show you my live trading account. I won't be trading because, as you know, I don't like trading on Fridays. You may ask me, so why you put this live trading session on Friday? Well, it's because of the fact that it's the last session in this cycle of webinars, and it's the only day where we can put it, and it's really essential that on this session we wrap everything up and put everything together, and it can be done on the last class. But I will show you what I traded, how it ended, and I will explain my strategy. I will show you my stats. Thanks very much, guys. If you want more trading occasions, visit our Twitter account and our website alpari.news.